in these times when people are struggling. I know a lot of people, particularly, the multifamily space are kind of hitting a hard time right now. It's just focus on yourself and focus on your own mental wellness and your own health, and let that be your first focus. And then from there, everything else can be determined. But if you don't have that right to begin with, you're going to have everything wrong to go after that.
The thing that we always focus on is how do we protect the investor dollar? And the other thing is, how do we not put ourselves where we start off in quicksand on anything? Like at the end of the day, we want to always be judicious about the deals that we do. And we really want to work alongside the right people.
What's up, everybody? This is Arsenio Hart again. And here on another episode of Today, I have June and Angel. What's going on with you guys?
Hey, how's it
going? Thanks for having us.
Yeah, no problem, no problem. I appreciate you. What I'll do is I'll have both of you just give a little bit of background, where you're at, where you're from, who you are, just so we can get a little bit more of a connection with you. Let's just start with you, Angel. How about you?
Yeah. So yeah, my name is Angel Gonzalez. I'm with Keystone Private Capital, one of the managing partners here. We are a company firm that's based out of Denver, Colorado, but we do invest all throughout the United States, primarily focusing on industrial real estate. It's definitely one of those things, though, that we are open and partnering with multiple people on just different projects. But at the end of the day, that's where our areas of expertise lies. And my background's quite unique. I always like to kind of kick off by just letting you know kind of what kind of my journey and how I am here, and then I can go with my partner here shortly. But for myself, I actually have a primarily background in the financial sector. First part of my decade, I was all in banking and primarily doing that bank management and higher level executive work. And then I transitioned over into more of an executive leadership role that following decade. And so it's been kind of one of those things where along that whole time, I've always been an investor in the single family space. I got to a point where I had a nice little single family portfolio, and then got rid of that and liquidated this, and then I got a little bit of insight about commercial real estate and with some people, and then we actually had partnered with a prior firm that really was heavily focused in office, and so that's kind of where I started my journey in commercial real estate. And then, due to my partners and the strategies that we believe at hand, has led me to the industrial space. So that's just a little quick rundown on who I am and what I've done.
Awesome. Are you born and raised in Colorado, or?
No, I'm actually originally from Panama. So I actually was born in Panama. Was there in my early childhood. A lot of my family was from there. And then it's something where we progressed and actually moved to Minnesota of all things. So I went pretty much from Panama straight to the cold Minnesota, which I don't know why they hid that part from me, but but now I've kind of transitioned from Minnesota to Denver now for a couple of years, and so at least I got somewhere in the middle now versus the extremes. So
I see. You got a Vikings helmet back there. Yeah, y'all had a big win this past weekend, right?
Oh yeah, we took down them 49ers, and we call them Kirk O'Chain's time. So
nice. All right, let's move on to June. What's going on with you, man?
Yeah, no, thank you. So similar to Angel, I kind of have a background in sort of the finance industry, but more along the lines of accounting. And so, I came to this. I was formerly working as a CPA before this, and so I spent a lot of time in that world, and it was a variety of different jobs that I've done. So, I started out as an auditor, really looking at the books of businesses and understanding how the financial statements flowed, and then spent some time doing taxes as well. And that was really kind of a small part of my career, but that was really where I came to find an interest in real estate, because a lot of the folks that, I was working on their tax returns, I would see a lot of people that were doing really well were involved with real estate. So that kind of piqued my interest early on. But then I kind of spent the rest of my career in corporate finance before linking up here with Angel and Keystone Private Capital. And that's it's been a great journey so far. When I came to the firm, I realized this is a partner that really has an equal but almost kind of opposite skill set to me in many ways, and we really kind of balance each other out. And so it's been a great pairing and a great opportunity to focus on that industrial real estate sector like he's talked about.
And I think a lot of investors, and especially in the syndication business and the multifamily space, having that key partner that you align together, but you're kind of opposite of each other. You don't want to have the same skills. I mean, you don't have same skills and just not being able to do certain things that that would cause a hole in your business. You want somebody to either be the property manager, and then you need to also have somebody that's good with the numbers. You can't just have both of you good with the numbers and nobody's good at the property management. So I think that's a good point. How did you guys like meet up, and how did you guys like synergize together? How did you guys do that?
I'm gonna grab this one, and I would tell you the most unique part is that I truly believe that I'm in my make I'm a religious man, and I think nothing happens by accident. But Jen actually has happened to be someone that is my neighbor, and we come from different fields, and so and we were doing different work, and we had an opportunity to kind of link up and talk through like what his area of interest, because he was a prior CFO at a firm, and for myself, I was at Keystone Private Capital, but I saw that that was the skill sets I was looking for, and so we were just kind of talking about his background, my background, and all of a sudden I'm like, that's exactly what I'm looking for. And so it was kind of one of those deals. I'm like, I'm not trying to be creepy on my neighbor, but like, I need you.
Crazy. That's your neighbor. He had exactly what you was looking for, and he's just right there next to you. How long were you guys neighbors before you like finally like, oh snap, it was like a light bulb?
It was probably a good year before
Yeah.
we really kind of decided to link up. We didn't really have the thought before that, but it really is like you say, the perfect match. Just there's so many things in this industry that there's no way I would have been able to branch out and do on my own if I was ever interested on it. And Angel has that skill set. He has the skill set to really engage with people and talk with people, and speak to investors and those types of things. I'm a little more reserved, so typically that wasn't my background, but I like to stay in the back room in the office with Excel spreadsheets, and that kind of doesn't really align with what he likes to do. So it really kind of worked out well in that regard.
That's perfect. That is just a great story. So I do want to ask, so because throughout the real estate industry, we sometimes have like we hit those hurdles and we have those points where we refuse to take that action or take that next step, and that's what this podcast is all about. So I want to jump into some issues that you jumped into. So if let's just say for example you ran into an obstacle and it was it stopped you from taking that next step to move forward. Do you have any stories or examples you want to share with the audience, and just give some tips and some strategies that you did in order to overcome that hurdle or that obstacle?
Well, I'll tell you that early on in my commercial real estate endeavor, one of the things that we ran into was we had a deal that was on the table, and quite frankly, one of the things that I would tell you, and why I'm super grateful that I have a guy like Jen who's really, really dialed in on due diligence and things like that, is that we took an opportunity to look at a property, and there was something we had gone really far down the line, right? We initially thought things were checking the boxes, and then once we got to a certain point where our money went hard, and it was kind of one of those situations where we were like, okay, now where we're at between here and closing, we started kind of identifying and uncovering that some of the information that was being provided to us was not in alignment with what we thought we were going to be getting. And so that was a really difficult thing to a pill to swallow, quite frankly, because once you kind of far down the line, you have money on the table, you have to make a decision. You have to basically decide, okay, is there a pivot point here? Is there a way to move forward? Because I always believe that the idea of I'm kind of that guy who believes you should always look to make a deal, not why not to make a deal. But that does not mean you have to be foolish in your endeavors and just kind of hit your head against the wall unnecessarily. So in this situation, what we found out is we got so much information that was actually adverse to us moving forward that we had to make a call. And one of the things that was challenging about that is that we never want to put investor dollars at risk. Like for us, risk mitigation, and that's what Jun is one of the best at, is that he does not like the idea of putting people in the wrong positions. And so when we look at that situation, we realized it was absolutely paramount that we got out of that deal. And so we canceled the deal out. Now, the thing about that is that we already had paid for for anything from inspections, appraisals. I mean, you name it, we were already in it. And then also our earnest money, right? Like we already had all that in. And one of the things that we had to do was pull the plug. And as a firm that is very conservative, as a firm that will not put investors' dollars at risk that way, we took that on as a partnership level. So we did not, we absorbed that as a firm. It was something that it was a learning opportunity, but at the end of the day, the thing that we always focus on is how do we protect the investor dollar? And the other thing is, how do we not put ourselves where we start off in quicksand on anything? Like at the end of the day, we want to always be judicious about the deals that we do. And we really want to work alongside the right people. And one of the things when you uncover that the other party is not really being forthright, it was definitely an eye opener for us. And quite frankly, I think that even more so, Jun has been even more instrumental in making sure that he takes a really bigger risk factors and everything into consideration, because he is so conservative about the things that we do. So
I think that's a great point, especially when you talked about risk management. I think protecting an investors, protecting them is at all costs. It's very, very key. And not only is it key, it builds your credibility and it also builds upon the trust. So investors will likely trust you more when you're open and you're honest and you show like, hey, this deal at first it looked great, but now we're seeing like the numbers aren't working. It's just things are falling apart. Sometimes you have to pull the plug and just being honest with them. I think that's
Right.
that's a big key. What about yourself, June? You got any?
Yeah, we've had a couple of experiences like this along the way, and none quite, I guess, to that extreme, but we've had a couple of deals where we've gone a few steps along the way, and we run up against some hurdles, like you say, and we've had to pull the plug once or twice, and it's just not anything that was detrimental to the firm in those other cases, but just looking at the risk factors, understanding that this may or may not align with what we're trying to do with our portfolio and our investors, and understanding that there's a time when you can get out of a deal even if you have some lost hard cost, that it's still better for everyone involved. And so making those decisions up front, just being honest, being willing to decide quickly and decisively when you need to make that decision, that's been kind of key to our firm whenever we have those situations.
That's awesome. That's awesome. I think another thing to think about while we're focusing on investors and making sure we're protecting and doing the risk management for any type of deal. I think also applies to like in life. Like there are some things that you can move forward on, and there's some risk management things that we deal with in life. And I think it's important for us to look around and make sure that one, we're taking care of ourselves, taking care of our families, for those of us that have family. And then I think everything else will fall in place. As long as you are, I say due diligence, or we say due diligence in the real estate factor, in the real estate environment. But I think the proper due diligence on taking care of your family is the same way in life. So I think that's very, very important. Family is important to me. I'm sure the same thing to you guys. You want to make sure that you're making the right decisions, doing the right things to set yourself up for success, and making sure your family is taken care of. I think one of the next questions I want to cover is just when some of your wins. All right. So you had those hard lessons that you've learned throughout some of your investments. I wouldn't say failures, but hard lessons learned. But on some of your wins, can you share some of the valuable insights that you got from the wins, and maybe even your losses? But what did you learn based off of your wins, and what type of deals would you say is a big win for you and your team?
well, I will go ahead and start by saying that one of the biggest wins that we have taken on as a firm is just the partnerships that we have developed with with the right intentions in mind. And what I mean by that is that we're those kind of people that we are really open to serving and helping in any capacity. One of the main things for our company, people understand our slogan is faith, family, giving, and we take that real personal. But the main thing about that is the fact that when we look at what kind of investors we want, when we think about what kind of partners we want with co-GPing deals or joint ventures or whatever that look like, we've actually had a very great fortune that we took. So basically from a standpoint of, we go to a lot of different networking events, different conferences. And for us, we actually were able to, over various conferences and things, we were able to identify some really valuable partners that we were able to kind of come together and kind of create like a smaller mastermind and create an environment where we were able to now be able to foster some really good critical thinking and some other aspects. But the other thing that I really care about is the fact that because of this opportunity to partner with these people at this level, we were actually able to go into business together as well. So it was one of those things that it was like, hey, first we all were at these big network and all these different events. We got it to a more of a micro environment, and then from there we've actually amplified that by actually partnering on deals that we believe we're winners and that will be really good for our portfolio. And that's one of the greatest things about this space, is that it really allows for that team sport mentality to take place. When I was in the banks, that was not the same environment. It felt like my whole journey trying to climb up towards the senior level of management, it was like everyone was hoarding information. They were looking over their backs to make sure that the other guy wasn't trying to leapfrog them. And that's not the environment that we live in today. I really feel that we have curated a really good environment within our firm and within our investors, that we don't do business unless we are willing to basically be friends with you, or we're willing to do things at a more meaningful level. And we take that into consideration before we accept investors and do partnerships. So that to me is one of the big wins for us.
All right. You got anything to share there, John?
Yeah, I do. Absolutely. No, and that's absolutely right. Relationships matter so much in this business. And so we definitely celebrate the wins we've had with our partners along the way. For me, kind of stepping outside of deals and looking at more the firm level, one of the big wins I would share that I feel like we've had this year is just our decision as a team to pivot and focus on one specific asset class, and that being industrial. That's been a very critical step for us this year. It's really allowed us to kind of focus in and kind of really understand exactly what it is we're working on, and really limit our focus on one specific sector of the market, which allows us to really understand it better, to develop deeper relationships within that market. It's been instrumental for us, and I think we're finding more and more opportunities. It's funny because you narrow down into one sector of the market, but then you find within that sector there's so many opportunities there. So we look at large manufacturing facilities versus small bay garages versus industrial outdoor storage areas. Like, there's so many opportunities just within industrial that even that world can be big and overwhelming. But we found a focus where we're seeing more and more opportunities rise up even in a tougher environment.
Nice. I was going to ask about the industrial piece. So industrial, do you guys, because it's so robust, right? Is there a certain industry that you look for when it comes to certain properties, or is there just a few things that you look for in regards to industrial and in regards to the industrial industry?
Yeah, I'll jump into that one. So we look pretty much at a broad range of industrial types of assets. So like I said, we'll look at the large manufacturing facilities. We'll look at small bay garages. We'll look at distribution centers. We'll look at outdoor storage slots. So those are all opportunities that would kind of fit within our wheelhouse, and they all have slight tweaks in the way that they operate. But for the most part, we feel like we have a pretty good understanding of each of those little niches within the market as well. But we do tend to focus on things that are within the $5 to $20 million price point range, and so that's kind of helped limit our focus a little bit as well. And did you want to chime in on that any further, Angel?
Yeah, I would just say that I think that Jen hit the nail on the head on that one. I think that for us, though, is also about looking at what the future outlooks would really will really be and how we're positioning ourselves. Because I will tell you, when we started in the industrial and in the sector, we came about it from a standpoint of, okay, now we're going to look at all these different opportunities and these critical arteries throughout the country that we can be impactful. So it's not so much just the properties themselves, but we're looking at logistically what are we solving for. And so as we continue to go down this path, we are starting to identify that there will be some avenues where we're going to be really looking at maybe more ground up development stuff versus things that are currently there already, or if it's something where we might actually just overall realistically partner with certain people just to ensure that we can maximize whatever the outcome or whatever the vision is, from the standpoint of really looking at the onshoring and reshoring of the things that are happening in our country and how we can be players in that. And that's kind of how we're really looking at positioning everything.
Understood. I see. Do you guys do anything as far as, like, is there certain terms that you look for when it comes to these type of products and when it comes to industrial?
Are you talking terms for the go ahead, Angel.
No, that's what I was going to ask in terms of.
And go ahead. I'm sorry.
For the property itself, typically we're looking for somewhere in the range of like a 5-6 year hold period.
There we go. Okay.
Like that.
Okay.
But yeah, I don't know if you're speaking to that or maybe more bank terms or.
So I was looking for the 5 to 7 year terms, and then if you could expound on the bank terms as well. If it, I guess, give an example of a type of deal that you recently done.
Yeah, so I'll go ahead and jump and say that one of the things that I love about the sector. So when people are talking about, when you're looking at multifamily, your tenants' timelines are a little bit more compressed versus if you look at office, you might go from 1 year, where office you might have 3 years of what your average hold times or leases, and then you get industrial. Your industrial sector, a lot of the leases and things will be written somewhere in that 5 to 20 year zone time period. That is a big difference. And the thing that's even most differently about this asset class versus other classes as a class, their triple nets are involved in that. And what I mean by that is that the responsibility of the ownership is really to just make sure that they have a viable facility. Otherwise, when it comes to taxes or capital expenditures, all these other things, that actually is the responsibilities of the tenants themselves. And so that's a big factor. So when we think about that, and then the strategy with the banking side of it, with banks, it's all about risk and mitigation, right? So one of the things is when you have stronger leases for longer hold times with better trajectories, things like that, being able to get capital partnerships is a lot more, it's a little bit easier, and it's a little bit more advantageous because of the fact that they're looking at you as kind of like that stable, that steady Eddie, that stable product. And so that's one of the things that I would say is that sometimes you have to be critical about the fact that if, depending on what asset class or what you're doing, you might not have the same financing that you would because you might be a little bit higher risk to a lender than we would be. So that's kind of one of the things that we're seeing is that when you are focused on these on this asset class, there's just a little bit more opportunities than you might see in some of the other ones right now.
Yeah, I think just to tag on to that, I was introduced about 2 years ago to be a limited partner in an industrial building. I think in Mansfield, Ohio, and learning about the triple net leases intrigued my interest on being a limited partner in that type of deal, because again, as a limited partner, you're just sitting back collecting a paycheck every month or every quarter or every year, and that's what's truly that's what intrigued me and wanted me to dig in even more into the real estate sector and multifamily at that. But this wasn't multifamily; it was industrial. It was an opportunity that came up. The numbers looked right to me, so I jumped on that opportunity. And at first, I was a little skeptical. I was a little nervous, but with the partners I was talking to on a daily, on a weekly, monthly basis, they assured me and let me know that it's, if you're ready to take that action, if you're ready to go forward, move forward, then this is the right time. And what they say, don't don't wait to buy real estate, buy real estate rate, or just something of that nature, right? So
Yeah.
I'm so glad I had the opportunity to jump on and just again, the partnership has been going steady for the last 2 years, and I'm grateful for that. Let's just go ahead and move on into like the final say for both of you. Do you have any parting words or any final thoughts that you want to give based on the information that we covered today? And just after that, if you would like to just maybe give a motivational quote or something like that that you learned throughout the years of being in the banking industry and being investors as yourselves.
Well, I would go right away and just say that for myself, I think that the future is bright. It just might not be as easy to identify some of the things that are good deals versus a bad deals during this time. But the people that really dig in and really understand that there are opportunities there, I think they're going to win. For us, one of the things that we've done recently and that we're really excited about is that we actually launched recently a AI program, and that we are going to be really bullish on, because it allows us to really not only have AI integrated into our marketing, but it has AI being integrated into everything we're doing, from not only from our calendars to emailing to CRMs to all the things. And the reason that's important to us is that we believe that we want to be as efficient and as effective as possible as we continue to grow our firm into the future. And so embracing technology, embracing the things that are ahead of us is kind of one of the big things that I really feel is really critical to success in the grand scheme of things in this landscape. And then for myself, the one thing that I really focus on and that I've always had really embedded in my heart and the things that we do, when people go to a lot of these networking events or they have different conferences or things that they might show up in, one of the things that I always like to end by saying is that it's better to not go wide in the relational standpoint, but go deep. And the reason why is that sometimes people go into these endeavors and they just feel like it's like, it's shotgun dating, right? I want to talk to everybody. And I really think that's to people's detriment. I really believe that if you really want to be able to be impactful, not only to the people around you, but have them be able to impact you, it's about really going deep in those relationships and really understanding what it is that they're doing, why is it, what makes them tick, and how you can be beneficial to one another. And that will be kind of one of my things that I would part with.
Awesome. Thank you so much. And what you got, June? What you got for us?
Yeah, so similar to Angel, the things that we're seeing out there can be challenging to folks at this time, but there's a reason for optimism. And if you can be creative in this industry, you can find ways to get deals across the line, even in this environment. And one of the things that we've found a little bit of success with is doing owner financing, and there's ways of doing things. It's just you have to be willing to unpackage things a little bit differently and understand what the potential can be, but there's still deals to be had. And in terms of parting wisdom, my words would just be, in this times when people are struggling, I know a lot of people, particularly, the multifamily space are kind of hitting a hard time right now. It's just focus on yourself and focus on your own mental wellness and your own health, and let that be your first focus, and then from there everything else can be determined. But if you don't have that right to begin with, you're going to have everything wrong to go after that.
Beautiful way of saying that. I just want to say one more thing, and one more question. The last question is just, how can people find more about you and connect with you, and learn more about Keystone Private Capital, or just you in general?
Yeah, so people want to really get an opportunity to find us, and our firm is KeystonePrivateCapital.com or KeystoneAdvantage.com. Those are going to be ways that you can link up with us. We also have our podcast, which is Taking a Leap into Commercial Real Estate, that you can find on your Spotify. Primarily is one of the main places you'll see that. And then we are definitely on the social media platforms, so that will be on your LinkedIn and your Facebooks and some of your other ones as well. So we're very accessible. We really like to be that way. We love to be part of the solution. So please reach out. Do not sit on the sidelines. I think this is one of the things that are happening right now. Just get out and get with people like us, and we really will be able to kind of help, especially during these times where are a little bit more challenging.
All right. How about yourself, John?
Yeah, similar to Angel, you can find us at our website, but then on the socials as well, I'm on LinkedIn. You'll find me under my name, which is uniquely spelled Giangieri. I'm on Twitter, but I'm not as active there. But yeah, feel free to reach out. We love to hear from people.
Awesome, awesome. I just want to say again, thank you both for coming on my podcast today. Hopefully next time, when we get on the next episode, or not the next episode, later on down the road, Brittany can join us. We've been missing one of the team members, so maybe she can join us next time.
No, for sure. Thank you.
All right. Thank you guys again. You enjoy your day.
Thank you, Arsenio.